term plan. Here we are going to decode term plan. Hi, my name is Anuj Gupta. I'm an entrepreneur, mentor and advisor. I'm the founder of Tag Investments, a wealth management and taxation services firm having over 10 years of financial domain experience. We are licensed and registered with IRDA, Insurance Regulatory Development Authority, SEBI, Securities Exchange Board of India, and MCA, Ministry of Corporate Affairs. So today our topic is term plan. So what is a term plan? A term plan is an instrument, a financial instrument, an insurance tool that offers financial protection in the form of sum assured to your family members, God forbid, if anything unexpected happens. How much of a term plan one should buy? So the formula we call it the human life value. So typically the human life value formula is 10 times your annual income plus all the loans which are on your name minus the assets, which means if your income is 10 lakhs, so into 10, 1 crore plus you have a 50 lakh rupees home loan or personal loan cumulatively. So 1 crore plus 50 lakhs minus if you have assets worth 20 lakh rupees. So 1 crore, which is 10 times of your annual income, plus 50 lakhs, which is your loan amount, minus assets, which is 20 lakhs. So 1 crore plus 50 lakhs minus 20 lakhs. So which means 1.3 crores is typically how much term plan should you be opting for. Which term plan? So in India, we have approximately 20 plus insurance companies, life insurance companies, which offers term plan services. So you can opt between any of those. We'll come to that which term plan and which insurance companies one should opt for. Where can you buy term plan? You can buy it online, offline. So there are aggregators online in the online space. There are offline insurance companies, branch offices, and there are financial advisors and financial advisory firms which offer you these services of term plan. So you can buy it from anywhere from there. Why term plan? So it's simple. If you have an income and if you have family members which is dependent on their income, you should have a term plan compulsorily. On the coverages and tenure. So in term plan, the basic coverage, life insurance. Then there are riders like accidental rider and accidental cover rider and critical illness rider. So basic life insurance cover means that God forbid if anything unexpected happens, then that sum assured is given to your family member. In terms of accidental rider, that's a smart coverage one should opt for, which means accidental rider, God forbid, generally early deaths are due to an accident. So the nominee gets double the risk cover, which is the normal risk cover which they have chosen for and an accidental risk cover which they have chosen for. Plus critical illness. So generally in today's atmosphere, we've seen many of us being diagnosed with critical illnesses, which damages the complete financial stability and the financial plans and the financial goals which we make for ourselves and our families. So critical illness cover is also an essential coverage which one can and should opt for. Tenure, of lately insurance companies have come up with a whole life risk cover, which means up to 9900 years of age you can cover yourself. So somebody who's looking for a 9900 years cover is typically a person who's wanting to create a legacy and leave a legacy for the next generations. Otherwise, on the tenure front, what we suggest is if you know your family members are going to be dependent on their income for the next 30 years, suppose you're 30 years of age, and you know for the next 30 years is your income, active income going to come, and that is the income where your family members are going to depend on which income they are going to depend on. So you should be opting minimum for that much of coverage and tenure. In payments option, you have options like regular mode, you have limited mode, and you have single premium mode. Regular mode means that if you've chosen a tenure of 40 years to say so, then you can pay for the next 40 years regularly. In limited pay, you can choose 5 pay, 10 pay till 60 years of your age. In single pay, you can pay the premium upfront one time. So there is something purely